Hello everybody, Carlos here from Side Effects. Welcome to another forecast video. Today is October 15th, 2013. Let's get right into the forecast review. We're standing aside on all the markets, and for a good reason, which I'm going to be explaining in a moment, and with the exceptions of the Japanese yen. We're going to start it off with a buy pivot step setup on the Japanese yen. If we zoom in here, you can clearly see here this is the pivot that I was following through on the Japanese yen in these areas. Uh, you could go as low as in this case, but this is the angle that many people ask me. That's correct. That depends on you. Quite honestly, in my point of view, I like to go with the most common pivots in a kind of 45 angle degree. That would be the entry. We missed the trade for once, pulled back, tried again for the second time, and we missed. This is actually the price action is telling us what would you guess? A triple top formation and a fail to continue towards the upper side. So this is a part of that we all need to start understanding what the price action and the market is intended to do. Obviously, after it happens, and that's the reason we tend to explain that the market always leaves clues behind, telling us what to expect from it. If we go to the 4-hour chart, we are extremely overbought condition. Once again, check the video below. We explained this yesterday, but we decided to take kind of a risky trade just because of the fact of the price action, and it just we kind of were able to pull some profits out of it. Either way, it was just about 14 points, and for the second time about 15 points. By this time we would have known that the market would have come back against us and gave us a lot of time to liquidate on a small profit or small loss here. Okay, so what we should do right now, well, we need to wait for price action to take a blunt move, and I'm using these two pivots. If I see a close below that pivot, that would be the first cue for the market to continue to the downside. Second, I'm going to go back to the 1 hour. I need this low to be penetrated and continue to the downside to confirm the breakage of this pivot step, and that would be the next one. And the cross of the moving average on that side, preferably on the 4-hour and 1 hour. And obviously, where this blue line lies, this was supposed to be our target. That's exactly going to be where our stop loss is going to be placed, about a tick above that. Why is that? The reason is because that's a major important reflection point of sellers or resistance points that it was never triggered, meaning that it was a very strong at the moment when the prices try to hit it for 3 times in a row, right? Never reached it, so it's even stronger in that terms. So that's a safe place to place our stop. Hope that makes sense to you. So we're going to be standing outside until we see another opportunity. Next, let's try to see what's going on in the remaining of the market. Australian dollar is coming up from a top formation. We go to the 4-hour chart. Let's try to identify where we're at. And we can see here that we're above 80 as well. So it looks like a potential reversal as we speak. Cross of the moving average is not here yet. Okay, we need to see a cross. So basically, I would like to see a cross of the moving average and retest back towards that moving averages, just to give you a rough idea of what we're trying to do. But we create synergy zone to identify on pullbacks using Fibonacci's and Elliott wave plus the levels of our big time players, and combine those and try to find within a pullback which are the areas with high probability of reversal. That's how we come up with the synergy zone. Okay. So we're still waiting for that to accommodate itself and see if we indeed are going to go in short into this market. On the 4-hour chart, we see an extremely overbought condition, so we're going to wait. Next, we got euro dollar. Euro dollar just shoot to the downside here, and now is recovering heavily as well back towards I left intact. Remember the synergy zone. So that level has been violated and going towards the downside. We go to the 4-hour chart, check the MACDs. And it's kind of below 20, so it really doesn't make any sense. Take a look how the market retests this low, but has not closed below that low. So if we go back a little bit in time, let me zoom out. These are a conglomerate of support base area where the buyers are in control, and that's where we're at right now. My question would be, would you buy into this market? Will you sell into this market? Well, price action is indicating that the market is intended to gyrate towards the downside. But on momentum base, though, it looks like they're supposed to continue towards the upper side. Why is the market behaving like this? If you have not been following the news, the U.S. Government is having this huge issue with the federal government being closed out, so the economy is being wiped out um, in terms of emotional triggering. That's what I'm talking about. It's being wiped out from their emotions in terms of not knowing what exactly is going to happen. So the market is being reacting completely violently up and down and have no idea where it's going. And you can see that happening as we speak from the markets, meaning that we are a little bit of a maverick traders just for the fact that knowing where most of the big time players are standing outside of the market, we're trying to find some opportunities for us, right? So that's what we don't want to project here in Foreside Effects. Still, when I see the opportunity arise and everything boils down into the confirmation of our system, then we take the only and only those trades that has been confirmed. The other ones we stay outside. So I hope you see and understand what I'm talking about. So my question to you, this huge downward move, will this indicate a real intention towards the downside of the market? If you take a look at the prior support, they tested and reversing back up again. It doesn't, right? So we need to stay out until the market actually decide where they wanted to go. Last but not least, we got the British pound. Sideways situation completely, as we can see here on the 4-hour chart. And if we take a look at it, let me just go ahead and project this. We're below 20, so it looks like the market is intended to going towards the upper side. Same thing applied. Take a look how they bounce off that level again, retest, fail to close below of it, and is coming back up again. Will you call this a trending market? I hope not. That way, we were going to decide to stay outside of the market until we see the market going somewhere. I hope you understand this is the most important thing for every single trader out there. Once again, and I repeat, you do not need to force a trade where there is no trade validated in your favor. If you want to gamble your way into trading, that's absolutely fine, but don't count that towards our methodology of teaching, which we usually go and identify trendable markets. Once we have confirmation of the market is literally trending, we find high probability reversal points and we position ourselves accordingly on those directions. In the meantime, we're going to be standing outside for a while and watch the market closely. This is Carlos Diaz from Foreside Effects, and I'll see you in the next forecast.